Hello, welcome to the Brew. Today we have a special guest, Chris Brecher from Simpler Trading. His second time with us. We're going to talk about reversal patterns using the charts. He's going to show us some setups and what to look for with these reversal patterns. So let's get right to it on the opening bell. How do, Chris? How are you?
Fine. How are you doing?
I'm doing great. Good to see you again. This is version 2, I think, right? This is our second coming. This is awesome. I'm excited about this this topic, reversal patterns. I think we talked a little bit last time. I don't know how to read charts. I mean, I know how to read them, but I'm not good like you are. So I'm going to learn something too. This is going to be awesome. So set this up for us. What does this mean? Explain it first. And I know we're going to go to some charts to look at an example or two.
Yeah. Well, number one, I'm 2 days ago when I heard I was going to be on the show, I was asked what to talk about, and I said reversal patterns. And then yesterday, the ES is up 55. So I'm so glad I'm on today and not yesterday.
That's right. So we've had the big reversal, right? In over 2 days.
Right. So basically, everybody I look at it as limited capital. So if you have a limited amount of capital, you better know when to initiate correctly, so you're not like just shorting on the way up, or let's say just inversely buying on the way down. You want to have where the proper deployment of your capital. So the way I look at it is everybody for weeks has been talking about the advanced decline bat and been talking about the divergences and how extended markets are. And I totally understand that, but that can go on, like, a long time. So I try to combine that with chart patterns. And I don't look at like candlesticks, like every little candlestick, or like I say, every little twerk. But I don't look at every little candlestick. I look at indecision candles, big green candles, and big red candles. And it can be either on a daily, it can be on an hourly. But the point is, I combine that on a daily with, let's say, the 50 moving average and the 20 moving average. And intraday, I'll use this thing called an ATR trailing stop. So if I want to do a swing trade on the short side in a daily, I better start seeing an identifiable daily pattern.
Okay, so that sounds good. Is it easier to go to the screen and take a look at this in reality? Okay, let's do that. Okay, this is perfect. So just so I can tee this up correctly, we are looking at what, a daily chart here. I'm trying to look around here.
On Microsoft.
Okay, so we have Microsoft up here, daily chart, and when we say daily, we're not looking at minutes or 15 minutes or that sort of thing, or hours.
Well, I will, but this time, this was a great example of a daily indecision candle followed by a follow through on the downside.
Got it. All right, tell us about it. What's going on?
All right, so whether it's Microsoft, whether it's Broadcom, whether it's Apple, I've been watching how far things are over there moving at their 50 moving average.
Okay.
So in this case, you can see Microsoft over here on the bottom left was about 13% above the moving average. That's sort of ambitious. It was really about 10% and 10% and 10%. And so it is now also, but that's not the point. The point was the indecision candle right here. So you got the indecision candle, or we call it a doji. And what's interesting is every one of these that got extended ended with an indecision candle and followed by a big red candle to the downside. And luckily it did the same thing.
Okay. So this indecision candle, what does that mean exactly? So I know.
Well, that's a doji that basically the opening is similar to where it closed. So it's just showing opposing forces. But the beauty of it is if you did short on the indecision candle. Now, I don't short on the indecision. I like shorting on the first break. But the problem is the first break after a big old move up usually creates an oversold. So then you get that green candle to test it. but at least you have a backstop.
Okay.
That's the key. You have a backstop once that indecision and that big red candle. So you have a backstop of where you see your exit point to admit you're wrong.
Okay. So if you get in after this indecision candle, after you have this sort of confirmation, I guess, and you're wrong, right? Where's your stop now, or how do you get out of that?
All right. Well, the best way I can show you is probably go to an hourly chart.
Okay.
There you go. So there's your indecision candle in Microsoft in this zone.
Gotcha.
Right? So right here, you had the break, but usually the first break results in an oversold condition.
Okay.
Did short there. Let's just say that you jumped the gun and shorted right here.
Right.
Your stop has to be up here. Up
okay.
And really, in this zone, that's not much of a stop. You're risking probably about 2 or 3 points. See, it was close.
Right.
But, you know, if you didn't do it because you're like the CPI is coming out and all that stuff, you have more than enough chance on the opening today. And then again, with the backstop. So you had the backstop, it broke down, but you had that area that if you were wrong, you probably would have gotten out above where it closed.
Okay, got it. So where do you now that was the wrong side, meaning you were wrong. What about the right side? Where do you get out of this thing? How do you know where to take your profit?
That's a great question. Well, there are a couple of ways. The biggest is that the more places that it touched, so on the way up, so if it had little tops, the more time, I know it sounds real basic, but we're sort of basic type of traders, is usually you'd start with that. So those prior tops become support right in that area.
Got it.
So now that, you know, obviously it got under it, but that's why we call it a support zone.
Yep.
Because you're not exactly sure, is that the top, like right here, or those the prior tops, but it's a zone. So if I was shorting in here, I'd be getting out in here. So taking your 6 points.
That's a lot. It seems like a lot. So do you do with these setups, are you doing any option trades? Or are you just selling stock? What do you like to do most, Chris?
Well, it's funny you mentioned that. We did some butterflies, some put flies in Apple, and it went too much our way. But when we saw what was happening on the opening, we shorted stock against our position.
Oh, you did?
We did a butterfly around 2:30 yesterday.
Yep.
But today, when we saw it start to plummet, we just shorted stock against it.
Okay. Okay. So you do use the option, and do you like to use butterflies to get to the zone where you think it's going to kind of peter out?
You know, in hindsight, once I saw that bear flag, we should just be buying put verticals, or like a lot of people say, put debit spreads.
Yep.
And just gone for that. The only problem with that is definitely that they're still in massive uptrends on a long-term chart. So that's why I did them as put flies. If it looked like this, like down here, and looked like that, where it was really turning, you had a backstop over here. Yeah, I probably would have been a lot more aggressive about put strategies.
Okay. Okay. Have you ever used? And the reason I'm going to ask this question is because we have a lot of folks who like to use this strategy. Have you ever used like the broken wing butterfly, where you don't have uniform strike distances? Do you ever use that one?
Sorry that I'm smiling, but I'm watching. One of my pet peeves is being too right. So today,
that's right. That's why I asked the question.
Yeah, today we came in long IWM.
Okay,
but we came in long around 204.
Yep.
So it opened at 207. Luckily, we only lost like 30 cents. But once we saw this and we saw the coiling, definitely I should have done a broken wing. So we did a 200, 204, 208. But I came this close to doing it 200, 204, 206.
Okay.
Which at least you would have made about 50%.
Okay.
So yeah, when I see coiling, I'm much more likely to do a broken wing.
Okay. That's interesting. Yeah. Yeah. I don't know. I mean, look at I understand why the folks love the broken wing. You can, if you're really right and it just screams, you're still going to win, right? So I get that. That's kind of fun. And I'm not trying to catch a falling knife at the exact spot supposedly, but that's kind of cool. We see a lot of that. That's awesome.
Yeah, it's but you were also combining that the whole market was going nuts and you were betting on some kind of rotation, which is what happened.
Yeah.
So definitely betting on that. Also, you had a nice coil. I mean, the only reason I didn't do it as a broken wing is because of the CPI coming out. But in hindsight, yeah, broken wing would have been great.
Sure.
The problem is I would have done a broken wing. Then I'm like, well, that makes me really delta long. So I better hedge in the overall market. But if I did that before the opening, both sides were up. So that's why I did it more. Just that was the only trade we lost on today, being right.
Yeah. So how much emphasis do you put on aftermarket data, meaning after the close, before the opening, when these things are moving pre-market or post-market for that matter? Are you valuing those candles as well, or is there some metric that you use even mentally that you say don't give it too much credence because it's so less liquid? What are your thoughts there?
Well, like this morning, we shorted Home Depot.
Okay.
And before the opening, because now we were long way down here.
Gotcha.
But same thing with butterflies, not broken wing.
Okay.
So what happened is that today it finally filled that gap. So we were watching the opening. We shorted a little at that, just under that red line on the right. 351, bought at 350 on the way to 348, but still made money. But the point was that when the overall markets were selling off right on the opening, this was still near its pre-opening high.
Okay.
So that made me think there was going to be a big old rotation.
Got it. Okay. Awesome. So you do use the pre-market a little bit.
Oh, yeah. And I mean, like I look at like Delta. So, Delta opened down like 4 points.
Yeah. We talked about that today, as a matter of fact. So that's interesting. Go ahead.
Yeah. I mean, I look at a lot of the first earnings of the quarter to see how as tells for the rest of the markets. Not like it's perfect, but the whole idea is that Delta has been in a downtrend anyway. So they came out with really lousy earnings, sold off to support. But as you see, even though the overall markets are getting slammed, it's on its high for the day. So maybe that's a great tell for other economically sensitive ones in that group for later in the month.
Yeah. You know what? I was reading the Delta earnings too. It seems like they kind of beat around the board, except for they had issues with their cash or something like that, I believe. I can't remember what the reason for the big downturn, but it seems like they beat on consensus estimates. They beat on revenue, and all of a sudden they got hammered. So there was a problem with inflation in their costs that hit them, I think. But you're right.
The way I'm looking at it is I was definitely watching pre-opening and watching the overall market. Here you go, the opposite of Home Depot, that markets were selling off, actually similar to Home Depot, and the stock wouldn't test its overnight lows.
Yeah. Interesting.
So that seemed like a good tell that there was going to be some kind of reversal pattern going on.
Yeah. Now, how do you find... Do you have a basket of stocks that you always pay attention to? How do you find all these setups? Do you have your little universe of things that you love to trade?
Yeah.
Or how does that work?
Well, right now, like when Delta comes out, I'll look at the transport stocks. Like if we see Home Depot up, we'll look at the transports. But usually I have up a main list.
Okay.
So I'll have a main list that'll have all the ones you know and love.
Yep.
The Apples, the Broadcoms, the Googles, and so on. And we'll start there.
Okay.
So that seems like enough to me.
Yeah.
The SMCIs, the Costco. Costco is another massive tell, I think, and today. So you're talking about pre-market activity.
Yep.
They finally raised their prices. They're going to for the first time in like 5 years. And they had better sales than expected. And the stock got destroyed after the opening. So to me, that was a big tell that the overall markets were not going to stay up. If the strongest stock on the planet has good news and it reacts bad to good news.
Yeah. It's funny you bring up Costco. I was talking to the family about Costco the other day, And I said, where do you think Costco stock is? And you know what they guessed? $60, $70. I'm like, no, not even close.
It's amazing that I think it's overdone, but here we go again with those reversal patterns that today might have been, if that's the best this stock can do with great earnings,
right?
Great sales and great news, that's probably the reversal pattern you're looking for. Unfortunately, now it's at support. So now to me, it's how it works off that ugly candle. But this is probably a fade on strength. But here you go. Do you do it as a broken wing, or now do you do some kind of butterfly like, well, I want to wait for a rally, so I'll just be patient. But definitely you got to use the opening as a backstop.
Gotcha. So when you do these butterflies or whatever you're doing with the options, what term are you looking at? Are you looking at 30 days? Are you looking at a week? Are you looking at the next day? What's your honey zone for the expiration that you choose to make your spread or trade?
Well, on this one, you could try to do including the earnings. So then you could more buy put premium because the premium isn't really going to go down with earnings. Prior to earnings, because vol goes up, but the time premium won't die as much. But in this case, I would like to see how it works off that oversold. And then I'd like to go in prior to earnings. Let's say it's hard for next week because on the one hand, you have that support. Like you see there, that's a lot of lines. I put up Trading View and show you.
Yep.
So on the one hand, you have the big old sell-off today on good news. But on the other, you have it oversold on a short term, not on a long term. So on this, I probably would look at something for next week if the expected move was enough.
Okay.
So to me, at 851, I'm not going to touch it. I'd like to see it 865 and then see about maybe the July, like around 855.
Okay. Got it. Okay, great. Do you, are you building this right now?
I was just doing it for you.
Yeah.
That's not bad, like 370, but here you go again. What happens if I'm too right? That's why I'm more comfortable doing that on the first rally. Gotcha. Right here where it's near its low for the day.
Right. So popular stock, I'm not sure you follow it. What about NVIDIA? Do you follow that one?
Yeah. All the time.
Okay. That's the stock that's crazy, So what do we see on NVIDIA?
Well, the same thing with that reversal candle, but the problem is we've talked about this a lot on our site, is that a lot of times these stocks sell off after a split, but you can't just sell it just because it has a split. You got to wait for the ugly candle. So this one was pre-split in Chipotle. That was post-split. And once that happened, it hasn't been the same.
Okay.
So when you go into NVIDIA, it went up post-split.
Yep.
But then when you got that red candle, that's been about it. What's interesting is that looks a lot like Microsoft on an hourly.
It does.
That it went up and then went and tested the high, but now you have a back.
Got it.
But definitely, what do you do in NVIDIA now? And now after that reversal candle, I'd look at an hourly chart. I'd see that it's oversold at support, even though that's not a very good chart. But I would look at something for next week, under the market if this has a rally. Right here, it's a little tough because it's at support, so you don't really want to do a butterfly with the middle strike under the market when it's oversold at support. But on the other hand, this looks like a really ugly reversal pattern. So that's why I'm probably not going to set these up till the middle of next week. I'd love to see it go to the middle there and then play it under the market.
Okay. Got it. All right. Wow. This is great stuff. So simplertrading.com. Yeah. That's where they can find you.
Yep. And then I'm in a division of it called Chart Patterns Mastery. Luckily, I'm going over chart patterns.
That's
So,
right. It's a good idea, right?
well, it could be unusual options activity, but then you'd have to rename the site. But
That's right.
I look at that a lot. But like from the floor, it's not like it was when all of a sudden you'd see somebody in a pit just buying every call they could in a takeover stock.
Right.
You got to be so picky on unusual option activity. And I'll tell you, yesterday, there were a lot of people talking about, oh, there's unusual call activity in NVIDIA. And the problem is, and the biggest mistake I see is if a stock's up 6 points, it's going to have unusual call activity. It's the key is what the activity was before that happened. And there just wasn't any.
None, huh?
No. So it's definitely beforehand that matters. Same with like Pepsi or Delta. So Pepsi's doing nothing. And what did it do prior to earnings last night? It was evenly dispersed between calls and puts.
Okay.
So I've seen a lot of times with these earnings where I call it the Robin Hood effect. So usually prior to an event, there's always more calls and puts because of the Robin Hooders. They don't like buying puts.
Yeah.
But that's why if you look at the bottom here, I only have put sizzle. So on Thinkorswim, that's the amount of puts relative to the normal day at this time. So what I'm looking at when I do earnings, so we'll do all the earning, we'll have them all listed, is looking at the puts, not the calls. So if you see unusual put activity, and to me, this is, I'll show you from yesterday. To me, Pepsi, it had like 10,000 of one of the strikes puts, but on the other hand, it had like 7,000 calls. So to me, that's not unusual. And I'm always taking the closer in, the closer to the event, figuring that that if somebody knows something, they're going to buy the ones that have the least premium.
Yep. Got it. Okay.
But if you look on the close in Pepsi, it's just evenly dispersed. It's not like out of nowhere you had 7,000 puts.
Gotcha. Okay. So no real tell on the order flow.
No, not in this one. How about Delta?
Yeah.
So here's Delta on the close, and you see it sticking out like a sore thumb.
It does.
At 11,000.
Yeah. Wow.
So definitely in there, you could go in and try to do something under the market, taking advantage of the outside volatility, which would be something like this. Would be something like, let's say, let's see. I didn't do it. I just want to make clear. I didn't do it. I'm not going to get on here and say, oh, I did 100 lot. So, but something like that, where it's like $1.50, you're taking advantage of the pop and volatility. And sure enough, I'm sure today it's, up probably 100%.
Right. That's great.
The other thing, and it's a good thing to look at in hindsight, if you're still learning how to do, let's say, the deltas of the world, a good way to look at this is the next day is look at the open interest as it updates at midnight. So as you see, the open interest stayed up.
Yeah.
So that wasn't just day traders flipping the options. They were initiating the open interest. If you look from the day before, the open interest was only 2,000.
Gotcha. Someone had bearish thoughts.
Yeah, thoughts, or they had bearish, they met somebody in the elevator and said, oh my goodness, I hope I keep my job tomorrow. So,
Oh my God. That's great stuff. Well, Chris, thanks for all this. This is awesome, man. I'll tell you, I'm just fascinated by this sort of thing. Really great. Appreciate you coming on. So we're going to do another epi of this right down the road.
Sure. And many times as you want.
And we'll have another kind of pattern. I mean, I'm sure you do more than just reversal patterns. You do all kinds of stuff, right? Breakouts, all kinds of things still. Yeah.
Yeah. Definitely. You saw the Intels and MongoDBs have bullish breakouts, and there were chart patterns that showed that happening.
All right. Maybe we'll tackle one of those next time.
Sure.
Perfect. Chris, always a pleasure. Great to see you as always. Chris Brecher from Simpler Trading. I can say that, right?
Yeah.
Okay. Good. I love it. Simplertrading.com is where you can reach him. Dig around in there, you'll find him. I promise.
That's right.
All right. Good deal. Great to have you on, Chris. We'll talk next time.
All right. Thanks again for having me on.
You bet.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.